Hungary's central bank has today opted to cut interest rates to a record low of 4.25%, the 11th consecutive cut in as many months. Zoltan Arokszallasi of Erste Bank is on the phone with me now. Zoltan, while this move did take advantage of benign inflation, is it possible that the central bank is being over-optimistic regarding external factors? Similarly, with this now the 11th consecutive move to record low interest rates, how much longer do you anticipate this trend to continue?
In our view, today's step was anticipated, so it is no surprise for us that the central bank lowered the base rate again by another 25 basis points to 4.25%. Regarding the outlook, however, it is getting more and more uncertain. But in our view, if someone takes a look at the statement of the central bank released after the decision, it's much more cautious in assessing the room for maneuver in monetary policy. It says that in the last couple of weeks, the risk assessment has been quite volatile regarding Hungarian assets, and this can limit, in our view, the room for maneuver in monetary policy. So earlier, before today's decision, we anticipated that the base rate will be cut to 4% in July, and I think that today's statement from the MPC is consistent with this forecast, so we stick to our earlier call that there is just room for another 25 basis point cut in July, and the bottom of the easing cycle is going to be at 4%.
This decision comes as Hungary's economic sentiment index jumped to its strongest level in 2 years in June. In spite of the significant flooding, is 2013 proving the economic fairy tale it was touted as? And what role has Orbanomics played in this success?
Well, if someone takes a look at the first quarter GDP figures, they indeed surprised to the upside. However, I have to highlight that there were some one-offs in this performance. In the fourth quarter last year, there were some stoppages at manufacturing plants in Hungary, and last year agriculture was also performing rather poorly. So the restart of manufacturing and expected increase in the output of agriculture could increase the output of the economy as a whole. On the other hand, a recent step from the government indeed helps short-term outlook in the economy. This step is a decrease in household energy prices, which was implemented as of the 1st of January this year, which of course increases the sentiment of the households, which are represented in economic indices. And on the other hand, it can increase spending of the household sector. However, on the longer run, this can limit investments in the economy, which might undermine long-term growth prospects. So altogether, the government's policy, in our view, difficult to make a long-term assessment on it, and short-term it might prove some positives, but on the longer run it seems risky to us.
You mentioned their manufacturing, and Audi has recently opened a €900 million plant, joining the likes of high-end car makers Mercedes, who also hold operations in Hungary. Could we see other European manufacturing industries moving to Hungary? What makes it attractive?
Well, Hungary, I think, by nature has a very good geographical position, and therefore it's attractive. It also has a skilled labor force and still relatively good hard infrastructure if you take a look at the region. However, if we mention manufacturing, we also have to say that the government is really having a positive discrimination for this sector. So other sectors in the economy were hurt by special taxes, for example, the banking, the energy, or the telecommunication industries. But the manufacturing industries are really being positively are in a positive discrimination. So altogether, this helps the manufacturing sector into Hungary. Still, the Hungarian labor force is relatively cheap, and again, it's relatively skilled as well. But altogether, the erratic policy of the government could undermine this position. I already mentioned this cut of household energy prices. On the long run, if there are no investments due to this artificial decline in prices, then hard infrastructure could suffer on the long run because there will not be no investments there. So it is a risk that in the long run, Hungary could lose some or at least some of the attractiveness it at the moment has.
The Hungarian forint was the most responsive of the EMs to Ben Bernanke's speech last week. As the HUF continues to play victim to a change in global sentiment, do you anticipate a weaker currency becoming a goal of the central bank?
My personal view is that the central bank is not aiming for a much weaker Hungarian forint. This is due to the reason that there is still a high amount of foreign exchange denominated debt in Hungary, although it has declined significantly in the last couple of years, but it still represents a very big portion of the debt outstanding. And if the forint is weakening, of course, installments will increase on foreign exchange denominated debt. So this is the main argument why I think that the central bank will not aim for a much weaker Hungarian forint. And on the other hand, which I already mentioned earlier, is that the MPC's statement released today after the rate decision also mentions that the external sentiment is becoming rather fragile in the last couple of weeks, which means that they are aware of these developments, and it is unlikely that they will cut the base rate too far, which would cause depreciation of the local currency.
That's all for now. I'll be back tomorrow with another exclusive interview. Goodbye for now.